Kunal, hi, morning. The fact that we were unable to hold on to the session top, 19,400 thereabouts, is that any sign of fatigue setting in, or should we not read too much into it?
Well, yesterday, in fact, I saw there were many indicators which actually indicated that the markets are entering into an overbought territory. Now, give a sense of few of the indicators. For example, the put-call ratio. Now, put-call ratio is a very classic barometer to try and judge or estimate the sentiment on the markets, whether it's on the neutral mode, a pessimistic or an over-optimistic zone. Yesterday in the Bank Nifty, we managed to cross a put-call ratio of 2.0, which is very rare that we see such kind of an elevated put-call ratio. And from there, from those levels of 45,600, when the put-call ratio entered the levels of 2 plus, the Bank Nifty saw a correction of more than 400 to 500 points on intraday basis. So what we are now trying to enter into is some levels of overbought in terms of indicators for the market sentiment, both in terms of technicals. We saw the India VIX rising up higher from 10.7 to 11.6. We can probably expect this as an adjustment, but when you try and add more factors like the put call ratio, the RSIs, overbought RSIs for many of the stocks, large cap names specifically, then it gives a sense that the markets are entering into a bit of a stretch as such. So we could now expect that 45,600, 500 levels on the Bank Nifty could act as a resistance, maybe 19,500 on the Nifty on the spot levels could act as a resistance for the index. So what I'm expecting for the next at least few trading sessions, the pace of rally should slow down significantly for the indices. So a better sense of trading could be that on the intraday highs when the index moves up 0.5% or so, I think it's a prudent enough strategy to try and book out profits from an intraday trading perspective and then look to buy back when the index comes into a neutral or a slightly negative territory.
Interesting. But your stock bias wouldn't change to sell, would it? Would you still have buys?
So I will still have buys, but then there would be some stocks which I would probably even look at for shorting, like for example yesterday which I indicated on HAL, a few candidates for shorting. But today I'm initiating a couple of buy calls and specifically focusing on the PSU banking names. So PNB is the first stock which I would suggest as a buy. Classical breakout, extremely strong charts, triangular pattern, inverted head and shoulder pattern. So a combination of all of these patterns rising up for PNB would suggest a buy with a target of 62. Stop loss remains at 54. And the second would be a buy on NTPC, playing a bit more defensive with the PSU name. Stock perched at a fresh multi-month, multi-week high. So would suggest 201 as a target and stop loss at 189.